Let's talk about Ramesh Damani. The guy is a true legend in Indian investing. I mean, he's famous for finding not just one, but multiple 100-bagger stocks. And if you're not familiar, that's an investment that returns 100 times what you put in. So the big question is, how on earth did he do it? Let's dive into his story and unpack the lessons he learned the hard way.
And this quote, it really tells you everything you need to know about his mindset. Damani is absolutely convinced that, for investors, the best days are still ahead. It's this powerful, optimistic view that really shapes everything he does.
You know, his journey didn't start with some brilliant master plan. Actually, it started with a complete, spectacular failure. Way before he was a big name on Dalal Street, Damani was working as a systems analyst out in California. And he got dragged into the world of investing by a bet from his father, an offer that was, frankly, too good to refuse.
Okay, think about this deal for a second. It was basically a free shot for Damani. Heads, he wins and keeps the cash. Tails, he loses and owes his dad nothing. Zero risk. And yet, he still managed to blow the entire 10 grand.
100%. Poof. Gone. And the crazy part is, this was at the very start of a massive bull market. Talk about an ego check, right? But that humbling experience taught him the single most important lesson of his entire career. So what went wrong? It's simple, really. He was driving while staring into the rearview mirror. He bought all the hot commodity stocks from the 1970s, completely missing that the world had already moved on. He learned a painful but vital lesson. The market is always about looking forward, through the windshield, not backward. So after getting completely humbled by that first attempt, Damani moves back to India in 1989. And this right here is where the story gets really good. He figured out how to turn what made him an outsider into his biggest advantage.
He operated within his circle of competence. See, back then, most investors in India just didn't get tech companies. They couldn't see the value because the main assets, the engineers, the programmers, literally walked out the door every single night. But Damani, having worked in Silicon Valley, he understood. He knew those engineers were the factory.
And that unique perspective, it led him to two stocks that would completely change his life. He was one of the very first people to see the massive potential in Infosys, but it was his other pick, a company called CMC, that really cemented his reputation. Now, CMC wasn't just some random company. This was a government-owned firm doing incredibly important, mission-critical work. We're talking about computerizing the entire Indian railway system and the stock exchange's trading platform. This was the technological backbone of the country's infrastructure. And here's the wild part. The big institutions, the so-called smart money, they thought this stock was junk. The entire company, doing all this essential work, was valued at a tiny 30 crore rupees. It was absolutely insane. Damani saw it and just couldn't believe how cheap it was. So he bought a big stake, and that stock just rocketed from 20 rupees to 800 in a little over a year. That's a 40-bagger. As he famously said, before CMC, no one knew who I was, but after CMC, no one could ignore me. What a game changer. Okay, so finding the right stock is one lesson, but the next one was maybe even more important. How much conviction do you have? How big do you bet? And just as crucial, what do you do when you are dead wrong? This was the exact advice his father gave him when he was buying CMC. It's a huge lesson. Finding a truly great idea is rare. So when you find one, you can't just dip your toe in. You have to have the courage to back up the truck and bet big. And what's so fascinating is how self-critical Damani is. Even with all his incredible success, he says his biggest regret is being too cautious. He calls it a middle-class mentality, that little voice in your head that tells you to play it safe, even when you know you've found gold. But hey, nobody gets it right every single time. For all his amazing successes, Damani is very open about his failures. And there's one in particular that he calls his own personal graveyard. He bought into MTNL, a government telecom company, right in the middle of the telecom boom. The thesis seemed totally solid, but what he missed was just how fast technology and the private sector would make them irrelevant. He lost 80% of his money on that one, a really painful reminder that no business is safe from disruption. So, after all these decades of massive wins and some pretty painful losses, what are the core principles he actually lives by? Let's try to distill it all down into a code you can actually use. He says that all of India's great investors share two simple but really powerful beliefs. First, they are fundamentally optimistic about India's long-term growth story.
period. And second, they have a deep, deep respect for the market. They know they're not bigger than the market, a mistake that has ruined so many people.
So how do you actually apply this stuff? Well, his rule of thumb is incredibly simple. Just try to double your money every 3 years. If you start with, say, 10 lakh rupees at age 25 and just hit that goal, the power of compounding is just staggering. By the time you're 55, you'd have over 10 crore rupees.
So this gives us a really clear 4-step path. Step 1, you have to work hard and save up that seed capital. Step 2, and this is the big one, you have to do your own work to develop real independent conviction. Then, step 3, aim for that goal of doubling every 3 years. And finally, step 4, be patient and let time work its magic.
And this might be his most important piece of advice of all. Real success comes from finding your own path. Copying someone else's stock picks without understanding why they bought it is a recipe for disaster. Why? Because you'll never have the conviction to hold on when things get tough. And that all brings us back to the final, critical question he leaves us with. Remember, Damani's first huge wins came from his unfair advantage, his unique background in technology. So what's your unique edge? What do you understand better than the average investor? Because that, right there, that's where you're going to find your own 100 baggers.